See, some people burst, but I thrive under pressure. I hose them down from distance like I was playing catcher. I pray to God, life is crazy, you know he'll test you. For real. Yeah, you know he'll test you. I'm a living legend in the making, don't care what you think about it. The only time I step inside a bank is for deposit. Failure's always present, but for me it's not an option. Cause I gotta feed my family and I know the critics watch. They don't want to see you win, so they gon' try to stop it. A humble guy until you cross that line, then I'm a pop. Choking out the competition on my searchy Baka. Don't associate with lames and haters, they are all impossible. Okay, guys, welcome back to another episode of The Process with your host, DeAndre, Presley, Mr. Keani Stevens. And we're back for part 2 with my good friend, Greg Breheim. Greg, I'm gonna be honest with you, man. You had me flabbergasted last week. I left I left last week like mind on overload, dude. Like, and I'm just like, we've got to get this dude back because there are questions that I need answered. There are steps that I need drawn out. I need a map.
You want your whole course. I'm laughing because he said flabbergasted, and you know he's an ex-football player. So since he said flabbergasted, you know he didn't go to an SEC school.
Hey, flabbergasted is the best descriptor.
Dude, I was just so like last week. I was like very attentive, but it was just like it's like me. I write songs, right? But I cannot read music to save my life. Like I cannot read music. And it's funny because I'll be writing and creating stuff, and people be like, "Well, how did you know to do that?" Like, and I'm like, "What are you talking about?" Like, I'm just writing based off what I'm feeling, you know. And so somebody put a chart up for me, and it looked like ants on a page. And so when you were talking, I'm just like, "What the heck is he talking about, man?" So like, we gonna have to dive into this a little bit more. And for me, you know, I'm gonna need a little bit more like break it down a little bit for me. You know, I need steps so that I understand what's going on. So, ladies and gentlemen, Mr. Greg Breheim, everybody.
Well, he calls him, and while you get the static ready, he calls him Greg, but I call him Weenie, and of course, the people that watch him call him Weenie because that's how I know it. I know his name's Greg Breheim, but I'm going to call him Weenie. And you don't have to go into a deep background like you did on part 1, but just for the people who are tuning in for the first time that may not go back and watch part 1, even though they should, can you give us a little background on why, what you were doing before you found your love of stock trading and what made you decide to go fully into it?
Okay. Yeah, no problem. So, hey, everyone. Welcome back to another episode of The Process. Thank you guys so much for having me on. This is going to be part 2. And yeah, what was I doing before I was a stock trader? If you guys don't know, I've been stock trading for 5 years. I've been streaming for a little bit over 2.5 years. And before I was a stock trader and a live streamer, you know, I was just in college. I was, you know, being a lifeguard, working quite long hours and just really just kind of wanting to get into a different career field. I worked for many different places. I worked for Wells Fargo. I worked for therapeutics companies, you know, coding insurance claims. But again, nothing really just fit that passion like trading and investing does, because it's like a daily puzzle, as I said on the last episode. And I love solving puzzles. And when you get rewarded for solving that puzzle, it's just really gratifying. So that's what I was doing before Weenie Trades and trading live. Just doing a bunch of misfit jobs, and this is where I've really found a home. And it's never a steady curve. You know, success is never just a straight line. It has some ups, it has some downs, just like a stock chart. You know, it's gonna go up a lot, it's gonna go down a lot. It's not gonna be just a straight uptrend. Although, ironically, today it actually is. The market's a straight uptrend. That's rare.
So yeah, I heard that earlier on your live, and I'm gonna throw this to DeAndre because what you just talked about, we talked about in part 1 on how intimidating it is for people who have no idea of what they're getting into or know nothing about stocks. So DeAndre, explain to our listeners what you were explaining to Weenie before we started about what happened with you and your significant other when you were looking at stuff last week.
Dude, so like we went and started a TradeStation account. Mm-hmm. And when we started a TradeStation account, we got hit with all the questions. And like it was like it's you know how in cartoons when they open the door and it's just like they just rush with a whole bunch of stuff and they close the door really quickly. That was about what it was. It was like for us, and so we started the account and got hit with a bunch of questions that I was like, I know for a fact I don't know this, and she's good with numbers. So I'm like, if you don't know this, we need to just go ahead and close this door. Let's go ahead and get Greg back on here, and we need to talk through a lot of this stuff because I am not about to mess up something and go broke trying to mess with something that I don't know nothing about. So it was just overwhelming initially. So yeah, that was my experience with the whole thing.
Yeah, and that's good that you kind of just put it on hold. I'm sure it asks you a lot of questions like, oh, hey, what's your trading level experience? Do you know about options? Are you a majority shareholder of any company? And it's going to ask you all these crazy questions. And yeah, that's good to answer them correctly. What is good about opening up a brokerage account is you can always amend each and every one of those. So there's not too much craziness going on there. But yeah, you definitely don't want to get into anything that you don't fully understand. So good on your part.
What was fun was I'm sorry, DeAndre. What was fun was when I opened the Robinhood account, I knew nothing about anything. And the questions were a little simple. You know, they asked you basically, what's your income? And then they found out how much you want to spend on a weekly or monthly basis. And then they kind of design if they're going to make an aggressive portfolio for you. It was like mid-level or I forgot the different types of verbiage for it, but it decided for you how you should spend your money, if you should be more aggressive. And it asked you a lot of questions, personal questions about how you operate. When I thought that was cool because I was ready for all the really, really hard financial questions. So I love how these accounts are becoming easier and easier to navigate. I haven't tried the one that you tried, DeAndre, so I can understand that.
Try.
And just before we go into that, Robinhood is great for just newer investors. And what it was talking about was aggressive versus conservative. And that's the type of portfolio that you might want to have. So not so much in terms of trading, but that's more of on the investing front. And we said in the last episode, there's many different forms of trading, and investing is one of those forms of trading. But the TradeStation one is going to be a little bit more advanced because that has the whole paper trading platform. You know, you can practice with fake money so that once you're good with fake money, okay, now we can put a little bit of real money and then work with that. But yeah, Robinhood, great for newer investors, and you can adjust that portfolio however you want. More aggressive is going to have more stocks into it, and more conservative is going to be for those that are closer to retirement. And what that does is it puts it in bonds. And what bonds do, they're pretty boring. They're pretty stable. They don't go too much up. They don't go too much down, but they do pay a consistent yield. And that's usually in the form of some dividend. And that's just, okay, you've held the stock or bond in this case for this period of time. If you held it for this period of time, you get paid dividends, and that gets thrown straight into your brokerage account, and you can withdraw that or reinvest those dividends. So
it's more of a safe thing for those who need to be really, really safe with their. You're not looking to blow your money,
gain, but don't want to lose.
You know, not looking to blow your money at 75 years old, right?
Exactly. Yeah. Versus you can take a little bit more risks.
We were laughing because Danny put up the exploding head emoji that said us when they were dealing with that. I'm glad to see Gavin the Crouch back. He says bonds pay interest.
Yeah, well said. Yeah. The interest payments, the yield on the bond changes as the principal is changing over time. So that's just in terms of portfolio stuff, but not so much trading related.
Explain to the people listening what a portfolio is. You know, you're in acting and modeling classes trained by people like me. So when you hear portfolio, that means something different. Explain to them what that means when you hear portfolio.
Great question. So similar to like an acting and modeling portfolio, I'd say, hey, this is all the work that I've done. This is, here's what I'm good at. Here's what I'm, what I specialize in. A stock portfolio is just, what's your overall investments? What's your investments? What's your trading positions? What are you in? So for example, a 401k is going to be a portfolio of just many different mutual funds and ETFs, which is just baskets of stocks. Think of it as a bunch of little pieces of stocks all put together in one area. So that's a portfolio. Other portfolios, like one of my trading portfolios in Robinhood, is a swing trading portfolio. What that means is I'm just looking to buy or hold any stock or option, and I'm going to hold that over a longer period of time. And that's my swing trading portfolio. You can see all of the different pieces and different positions, trades that I'm in that portfolio. So here's my portfolio, swing trading, generally a day trading portfolio. It's either going to be in 1 or 2 trades, and it's going to be back in cash by the end of the day because it's a day trading portfolio. Again, day trading, you're buying a stock and you're selling a stock, you're done within the day. By the end of the day, you're just back into cash. And cash just means no positions. The portfolio is in cash, as they say.
Okay.
Now, Weenie, it's going to be funny calling you Weenie.
Go for it.
So
you call him Big Weenie.
You say you do swing trading, day trading, right?
Mm-hmm.
What was the other one? You mentioned another one that you do, or are those just the two?
Yeah, so there's investing, which is really just trading, but on a really long time horizon. There's swing trading, which you're buying or selling a stock and holding it for at least one day, but generally like 2 to 4 weeks. Some people usually do a month or two. And then there's day trading in and out in the same day. And then there's for the gamers, the fast people, scalp trading. That's like, I'm trying to get in and out in sometimes 10 seconds, 30 seconds, 1 minute, maybe even as long as 3 minutes. That could be considered a scalp. Once it goes over about 3 to 5 minutes, that's considered just a regular day trade. So it's just terminology. And scalp trading is really just taking advantage of price inefficiencies, which you'll learn to understand as you trade more and more. But if there's, let's say, let's get into it. There's every stock price is just the price that you see is called the mid price, but really there's buyers and then there's sellers. There's the bid price and then there's the ask price. And if you want, I can actually share my screen and go into this a little bit more in depth because it'll help you understand scalp trading and just the way that the market flows. It could be some pretty interesting live examples. So do you want me to share my screen right now?
Sure, let's do it.
All right. So right now I have my screen up right here. Okay. Can you see it?
Yes, we could see it.
Okay, so right here, this is what you were looking at here is a level 2. And I'm just going to remove the chart.
Come on, Weenie, you got to call it what it is, the Matrix.
The Matrix, level 2, whatever you want to call it. So you can see that on the bottom right corner of your screen. Mm-hmm. And what this is this is an order list of all the open orders in the market. As you can see, it's moving quite around. Right now, this is on SPY. This is the main ETF that people watch. So if you ask somebody on the street on any given day, hey, what's the market doing today? They're probably talking about SPY. So each and every day I'm trading the SPY. I'm analyzing the SPY. It's our benchmark. But right over here, we have buyers and we have sellers. There's a bid and there's an ask. And there's the mid. So the price that you see right here, this is called the mid, 389.56. Right over here, though, on the bid side, these are the buyers. See how it says bid? The screen might be a little bit tiny for you to see. And then
I'm going to make it bigger. So you can just keep talking. They don't need to see us.
No problem. So basically, the price right now is saying, okay, SPY is at 389.53. What that means is there's bids at 389.52, and then there's sellers at 389.54. So it's the midpoint. What may be a better example is GameStop. So we all know GameStop, right? The stock that went parabolic. It went on a big squeeze. A lot of people made a lot of money.
Why do you keep having to bring up GameStop? You're doing it on purpose.
And I'm doing it on purpose because GameStop has a wide bid-ask spread. So what does that really mean? It means that GameStop is showing a price right now of $135.15 right now. Mm-hmm. But it's not actually $135.15. It's a difference between what people are willing to buy GameStop for and what people are willing to sell GameStop for. So there's people that are willing to buy GameStop for $135 15 right now to see the price is constantly changing. But there's people that want to sell GameStop at 135.30. So you see that it's not exactly the price that you see. It's a difference between the buyers and the sellers. And when you're scalp trading, what you're trying to do is you're trying to buy the bid, and then you get a little price movement in your favor, and you're trying to sell the ask. And so it makes a little bit more sense as you trade more and more. You'll realize how you get filled in the market. That means how you get into a trade and out of a trade as well. So when we're trading, we want to focus on highly liquid names. And what that just means is it's easy to hop in, easy to hop out, easy to enter a trade, easy to exit a trade. And that ease comes from how tight the buyers and sellers are. So if there's a lot of people that are hyped about GameStop, that's going to increase the liquidity. It's going to be easier to trade. If nobody's interested in a stock, this is where people get screwed in the market, is nobody's buying or trading that stock. So it's hard for them to get in and out. They can get out, but they have to usually pay a lot of money. So it costs more on your end to get out of a trade or out of a stock if not a lot of people are trading it. And that has to do with volume and liquidity. So does that make a little bit of sense in terms of scalp trading? I know it was a very long-winded answer, but it's very important that people understand that there's constantly buyers and sellers at every point in time in the market. And if you can, what we're doing when we're trading is we're anticipating those buyers, we're anticipating those sellers at every point in time. So as you can see, GameStop up quite a bit on the day. You can see a bunch of green bars.
Hold on. Pause right here. Because this is what I was talking about. I see you drawing right there. When I come on to your live and I see people asking you specific questions. No, go back to that one. Yep, there you go. And so right now you're watching GameStop, okay? And you're about to explain what the red and green was. When you do that, can you break down what are these lines that you're drawing? Because I've seen you draw parallel lines at angles. And of course, I don't know what those lines mean. So go ahead.
Yeah, great question. So whenever you see me on stream drawing, what that really is I'm conducting technical analysis. And technical analysis, it's kind of just like art class. We're trying to find these pivots and key areas where buyers and sellers are about to give up. And if you can find that point, that's where you have a trading entry and you have an edge and a chance to make money. Do you always make money? Of course not. But we want to put the odds in our favor by using technical analysis. And technical analysis is just using past trends, past price behavior to predict future price action with more accuracy than just a random coin flip or just guessing like, oh, I think this is going to go up, I'm going to buy it. No, I want to do technical analysis. So what we're looking at here is a chart of GameStop, and this is on the hourly time frame. The reason I know that and the reason you can know that is this right over here says 1H. It's an hourly. So what does that really mean? Each of these bars, as it separates through time, as we go through time, think of time as the x-axis. Each of these bars, and prices are y-axis. So right over here, this is the price of GameStop. So x-axis, time, y-axis, price. Each of these bars represents 1 hour of price action. So for example, this is the first hour of the day on GameStop. And what candlesticks do is they tell you the story of what happened in that time period. It tells you where the price was at a low point. It tells you where the price was at a high point. And it tells the story of how the buyers and sellers fought each other. That's what we're trying to do as we're trading. What's the story behind the buyers and sellers? Are there going to be more buyers in the future? If so, I want to be a buyer now so I can sell to those future buyers in the future. That's how I profit. If I buy right now and then nobody buys after me, congratulations, you just bought the top and you're down and you're going to be losing money. So we obviously want to make money and not lose money. So we want to reasonably predict or make a thesis of what the stock is going to do on the day. So when I'm drawing these lines, I'm trying to find out that interaction between buyers and sellers. So this is, again, an hourly time frame of GameStop. On candlesticks over here, we have an open, a high, and a close. So GameStop started the day. This is right at the market open. It started the day at $128 a share. It made a high. It made a low down here of $122 a share. That's indicated by what's called the wick. The body then pushed up and closed, made a high of 131. And I'm getting that from these numbers over here. Now, that because GameStop opened and closed, GameStop closed higher than it opened right over here. So yeah, GameStop actually opened at 123, made a low of 121, made a high of 131, and closed at 128. I can talk about candlesticks and candlestick structures on and on, but basically it printed a green bar. So that means, hey, buyers were in control. Whenever you see a green bar, generally that signals some strength. The next hour though, however, look at this. GameStop, the next hour opens up at 128, makes a high of 129, sells off all the way down to $123 per share, and then closed that hour at 124. Now, what we do is we can start drawing lines. Once you have an alternate red bar, green bar, that's where we can start drawing some lines. So let's say, okay, GameStop stopped at 124. We can draw a support level there now, and that's a horizontal red line. That means that as long as price is above that, what's called the support level, we can expect GameStop to move higher in the future. So that can be an area where, hey, if I bought GameStop, let's say you bought it at 126 or whatever, you can use that as your risk area. So that's if GameStop comes underneath that support level, it's likely going to go down, and I'm one of the ones that bought close to the top. I'm going to lose money, but we want to lose small when we're losing money. And when we're making money, we want to make as much as we possibly can. So getting into more technical, does this make sense, you guys?
Yes. No, seriously. Because if it doesn't make sense, I'm gonna stop you.
Okay, please stop me and ask any questions at any point in time. But right over there, so GameStop held the support level.
Hold on a second, DeAndre. I think his audio, he was freezing a little, but I think he had. There you go. You're back. Go ahead.
No, so I was just more so because as I'm listening to this, when you were talking about bids and ask and all these different things, what came to my mind was real estate, right?
Yep.
So I understand real estate a little. Ooh. I know, let's say, for example, I'm selling a house, right? And I have an asking price of, let's say, $325 or $324.9. That's my asking price for the house. Now I know a real estate agent is going to come in and say, all right, so based off of the comps in the area, this is pretty much the top that you can get. All right.
Yep.
And this is kind of the low end. Now that's what I'm asking. And I know when people come in, they're going to look at the house, they're going to walk through it, and then they're going to make an offer. Most people, when they make an offer, most people offer 10 grand less than you ask. Because everybody has a number that they're like, hey, this is the absolute most we're willing to spend, so we're going to ask lower than offer. We have some room.
Think we're losing.
DeAndre, you cut out.
Think we're losing. He's in South Carolina. I don't know what's going on in South Carolina. Maybe they bad weather.
I can answer that housing.
I can
question.
get where he was getting at. And I want him to hear it, so I'm gonna let him get back in. So when you're looking at the bar that you're showing right there, right? How am I determining? So you showed where it started. We've got the green bar, the one where you have now. We've got the wick going through there.
Yep, and the wick was what price once was, but it didn't close that hour at that point. Oh, we got DeAndre back.
Oh, okay, there we go. All right.
Yes.
DeAndre, you're back? Yeah, I think he's back. Can you hear us?
I can't hear y'all. Can y'all hear me?
We can hear you.
We can hear you.
I just can't hear you guys.
No!
So I'm sorry, guys. It's storming outside, and so that's what's probably happening. But please continue.
No, so I was answering Kiani's question, but I can answer your real estate question as well, or relate it back. And I think you got it. If you understand the real estate market, when you're asking a price, hey, that's the price that I'm willing to sell this piece of real estate. Guess what? It's the same in stock world. When you put up an ask order, that's what you're saying. Hey, I'm going to sell you these shares at this price. And that's it. And yeah, people sometimes will try to offer something. They'll be like, hey, do you want to sell it for this price? And that's people that are willing to, take that other side of the trade. When buyers place a bid on a house, that's like somebody placing a bid on a stock. And if the seller says, yeah, I'll take that bid, we have a transaction. Everybody is happy. The buyer gets filled. The buyer gets the house, and the seller sells the house. When the buyers and sellers meet, that's when we have the transaction take place. So, for example, if GameStop is trading at $134 a share, if I place a bid at $133 a share, GameStop stock has to come down to my bid price of $133 a share for me to then get filled. Once I'm filled, yay, I own my GameStop shares. And so that's where the transaction takes place. It needs to come through, though, that price. Sellers need to come and meet my buy price.
That's why when I was watching your live, there was one about for a 10-minute stretch, you were going crazy because all I heard was order filled, order filled, order filled, order filled, order filled. But those are probably orders you placed previously. They just at the moment got filled. You weren't just sitting here buying, just hitting a button, buying things constantly.
Yeah, although sometimes that is the scenario where I am just hitting the button, buy. But yes, a lot of the times I want to try and let the market come to my prices because that's what's going to give me the cash flow that I'm looking for. A lot of the times, if you're reacting a little bit too much, you're going to be all over the place. It would be let's bring it back to the real estate market. You wouldn't want to just go walk up to any random house and be like, buy, I want it right now. Here, whatever price you've got, whatever you're asking, I'm buying it. Some people do that. Although most people don't. What's that?
Sorry, I was about to say that does depend on what you do. There's wholesaling where they will come and just take a house in whatever condition. Now, most of the time they offer a lot less than what, that house is worth. And most of the time with wholesaling let's say you were selling a house that your mom owned and it's like, it's just too much. We're going to move her somewhere else. And somebody was like, hey, look, we'll offer you 60 grand cash right now. You don't have to do anything about it. You just get out. So there are moments like that. Sorry, didn't mean to, I think.
No, there is. And it's because they want it. They want it right now. They don't want to hassle with, they don't want to hassle with saying, I'll wait for this. I'll wait for this lower price or I'll wait for this higher price to sell. They just want it right now. And that goes back into order types. So there's many different types of orders in the market. You can buy the market. So that just means buy right now. I don't care. What I was talking about earlier with GameStop is, let's say I want to place a bid. I want to place a bid at 133. That's like me walking up to a house and saying, well, I see you're listing it for 300,000, but I want to buy it only for 250,000. We're either going to meet at 250,000 or no deal. That's the limit. That's the most I'm willing to pay. Same with GameStop. If I'm placing a bid at $133 a share, which is represented by this red line right here, or blue line now. So if GameStop comes down there, sweet, then we have a deal. Otherwise, no deal. If I just say I want to buy it right at the market, that means, okay, I'm going up to the house. I see it's listed for 300,000. Give it to me now, 300,000. And there you go. We have a deal. If I were to do that with GameStop right now, I would just say, hey, buy the market. Right now, the price is $134.60, but I would have to get filled from a sell order. So I'd probably get filled a little bit higher, meaning I would be immediately down on the transaction. That's called paying the spread. So GameStop right now, it's constantly fluctuating. So it's a little bit tricky to talk about, but it's at $134.50 for a share. If I want to get GameStop right now, I hit buy market and I'll get filled from a seller. And what I'm looking at is the ask price, and I'll get filled what the person is asking. If I want it right now, $134.60. And so because of that, the discrepancy is I would be down 10 cents per share. And that's the slippage that occurs.
So limit the confusion for people who are learning what you're talking about. When you request a buy, it's not just there's a bunch of magical stock here from GameStop and they give it to you. Someone has to sell that stock at that price. So I'm just making up a random number, even though you got to get close. You say I want GameStop stock for $100, even though it says 134, and if no one wants to sell it for $100, you're never going to get filled.
Yep. And you'll never get your GameStop at $100 a share. Correct.
Yeah, no, I just want to use a ridiculous number. But if somebody's like, you know what, I'm here, and then someone has to say I'm selling this at $100 for you to get it at $100. That's what I want to make clear, because some people think that when you just buy a stock, it's just, hey, there's a bunch of stock out here and you buy it and you get it. But that's not how that works.
Now, for me, I'm so sorry. Like, I'm sorry for asking repetitive questions. I really want to understand. So let's say, going off of Keanu's example, let's say I bid for $100 and GameStop is like, cool, we'll do it. Would I be technically up in this? Or would that work in my favor if they said yes?
It's not GameStop though. It's Greg. So Greg is the one selling his stock to you.
Okay. So
we don't know who is selling you the stock. It can be a market maker. It could be a firm. It could be Joe Schmo on his Robinhood app that happened to click sell at that point in time. Most of the time, it's actually probably just market makers. Sometimes it's institutions. You don't know who you're getting the shares from. And DeAndre, yes, if you put in a buy price for GameStop and you got filled at 100, that would be crazy. That would mean the price would have had to have dropped to 100 in that time period where you had that order. And yes, you would be up because the current market price is 134. So if you somehow got filled at 100, you would be up $34 a share. So you generally have to be close to the market price to get filled anytime. You may get filled like 3 months from now. Let's say you put in a buy price for 100. Maybe GameStop drops to 100 in 3 months from now. Then you get filled right at 100. And if GameStop goes up from $100 a share, that's where you're making money. Now, if GameStop goes underneath 100, you're losing money.
I'm losing. Okay. So they fill it at $100, and let's say it rises for whatever reason to, like, this may never happen. I'm just throwing ridiculous numbers out. But let's just say $175, right? It jumps to $175. At that point, would I want to sell? But I want to sell at that point?
Great question. And this goes back to, there's a lot of factors that should make you decide what you want to sell. As a trader, first ask yourself, okay, so this is the trade setup. So this is called the setup. So your entry is at 100. So entry is at 100. Then after your entry, you always want to think about your stop loss. How much am I willing to lose? So let's say you bought GameStop at 100. Let's say, okay, I'm only willing to lose $10. I'm on one share. I only want to lose $10. That's the most I'm willing to lose. So every time you enter a trade, ask yourself, how much am I willing to lose? And generally it should be based off a chart pattern and technical analysis, which is a whole nother world. Let's just say for now, for simplicity's sake, the most you're willing to lose is $10 a share. So that would be your stop loss is at GameStop, $90 a share. So your entry is at 100. That's your average cost, as they say. So that's your average, let's just say. So that's your entry, 100. Your stop loss, the most I'm willing to lose is $10. If GameStop comes underneath $90 a share, I'm hitting the sell button. I'm taking my $90 back. That's my $90. I was only willing to lose $10. Now, when you decide when to sell, so that's one form of selling, to cut your losses, to manage your risk, to stay in the game. You can't make money if you don't stay in the game. So that's the most important part. The second part is the fun part, when to take profits. And that's always a great question. And again, it goes back to, is there prior resistance? Has GameStop sold off from $175 in the past? If so, you probably want to sell. You're up 7.5 R, as they say in trading land. What does that really mean? Well, look, we entered at 100, right? So if it goes down from there, we're losing money. If we're above 100, we're making money. That $10 is your R unit. So that's 1R. That's your risk unit. So we always want to think in terms of risk units, because then we can evaluate ourselves as a trader. If you're a good trader, you're able to risk just a little bit, but make a lot. So this would be a great risk to reward trade if you entered at 100 and you put a stop loss at 90. So that means you're only willing to lose $10, but your take profit, your TP, is at that prior technical resistance area. And that's at 175, we said, right? You're making $75 if you hit sell, and then you just get that $75 cash.
Don't get greedy.
Exactly. And here's the thing. I love that saying, don't be greedy, but also it really depends on what the chart is. And that's where how good of a trader you are comes in. How good of an analyst are you? Sometimes it's bad to sell too early. Like, oh, I've got the profit, time to sell. And then you watch it continue to go up for months.
Even us who have never dealt in stock trading, we all know the quote, buy low, sell high, that you always see, you always hear. Talk about this for a second. Gavin Crouch says, I sell at my stop loss. I'm a discount trader. So what is a discount trader?
I've actually never heard of that. What a discount trader is.
Oh, and now look, that's one of your followers. So
Gavin, would you like to tell us what a discount trader is? Maybe you want to buy things for cheap and then sell them once they've rebounded. That's my interpretation.
Put it in the chat or come on live, Gavin, one or the other, and we'll keep going and put that in there for us. But I mean, exactly what Weenie's talking about. That's what happened when I was talking to him about when I opened my Robinhood account. And I got some stock in T-Mobile just because I had T-Mobile. And I was like, I get T-Mobile. I know that name. And then they merged with Sprint like a year later, and that stock went up like $28. Like the next couple of days. And then it went up. I got it at $53. And by the time I sold it, it was at 92. So over a long
period of that's time. Amazing. And that's what we call a great risk to reward trade. You may not have known how much you're willing to risk on that trade, but in terms of a trader sense, whenever you get a big move in your favor, it's like, wow. I like to say sometimes, wow, I'm up 10R on this trade. Let's say that means, okay, if I was risking $10, that means I'm up $100. I'm up 10 times my risk. Well, now that's what traders are constantly thinking of, because that's your stats right there. Like just with every sport, you got your stats, like how many receiving yards you got, how many touchdowns you got. There's so many different stats. Trading is one of those stats. Like what's your risk to reward ratio? For example, my risk to reward ratio, it's about 1.5. That means on every given trade that I take, I'm expected to make 1.5 times my risk. So for example, if I enter a trade and I'm risking $10, that means I'm on average making $15 for every $10 of risk that I'm taking. And so knowing those stats will help you develop as a trader. Back in the day when I first started, my risk to reward ratio, my R multiple, they might say, batting average sometimes. They might say, before when I first started trading, is only 0.5. That means for every $10 of risk that I was taking, I was only making $5. That's really tough to make money off of in the long run. So understanding how good of a trader are you is really how much can you risk and how much can you make, and then comes in your accuracy. So are you right? Are you making money 50% of the time? Are you making money 30% of the time? Are you making money 80% of the time? These will be factors into your trading stats. Do you guys have any questions on that?
The good thing about me is when I got that stock, I wasn't day trading. I didn't know that was a thing. So it was over a long period of time. But before you go on that, DeAndre, Gavin went ahead and answered. He says, I enter at $100. I won 110. I sell at R90 every single time. So with me, you get a discount.
I think he might be making a joke about his stop losses. Okay. Like every time his stop, you enter at 100, you want 110. Every single time you lose the 10. So maybe your risk is getting hit first.
Ooh, where Keanu go?
Definitely a goofy joke, if that is a joke. Otherwise, that's just my interpretation.
Well, so Weenie, tell me. So as we go through this, I'm gonna relate everything to real estate because this is
Yep.
helping me. Actually.
Hey, that's
So
awesome.
this helps me a little bit.
Mhm.
So in real estate, now I've bought and sold many different houses, right?
Nice.
There's always a point where in the real estate market, the quicker you can sell your house, the better. The quicker you can sell your house, the better. The longer you
Mm.
hold onto your house, that works against you because for I've had a house where I flipped a house and it was in a neighborhood where we were told, oh man, this is a hot market. You know, I see this house being you guys selling this house in about 2 weeks. We had the house for like 2 months, which worked against us, which means we had to drop our asking price. So
Mm.
so we had to drop our asking price a lot, which in that favor it worked for in the favor of the buyer and not for us the seller. Is there
Mm.
ever a point with this where like you want to hold your like is it better to you know hold on to your hold on to your share or whatever longer shorter, does that make sense?
Yeah, no, it definitely does. And it really comes down to, so when you bought that house, you were expecting it to be a hot market, right? You're expecting it to
Absolutely.
go up, right?
Yep.
But
Yep.
you eventually had to lower the price so that you could actually sell it and get rid of it. And so it
Yeah.
worked in favor of the buyer, as you were
Yeah.
saying. That
Yes.
happens in stocks all the time. When you enter a trade, and you're hoping to get a certain price, and the stock just doesn't go up in that direction, or even just goes down. That would just be where you just had to take the L, and you didn't get what you were looking for, and that losses happen in trading. It doesn't always go according to plan. Does
I
that
love
make sense? That
Yeah.
it's as
That
simple
does
as
make
that.
sense.
The stock just didn't go in your favor. You had to sell at a lower price than you had hoped for. Hey man, it wasn't a good deal. It was a trade that didn't work out. What you can do is you can mark your trading log. You can mark whatever notes or thoughts you might have about that whole transaction, and then we can learn and get better. So just in your housing example,
I'm sorry, Weenie. Danny is killing me today. Is there such a thing as night trading? Because I have a strong feeling this is what we'll be doing tonight. She's like, is asking all these questions. She's like, oh Lord, let me get dinner started because I know what we're doing tonight.
I love that you asked that question, Danny. And yes, in fact, I didn't even know this until 2 years after.
You were supposed to say no to save her.
Oh yeah. That's true. I don't trade.
We got you all messed up here, Greg.
Honestly, though, trading at night it is really choppy and it's a bit more random, in my personal opinion. So I would advise against it. You can do simulation trading though at night and practice a little bit. Doesn't no harm or foul to that.
Is that because for example, most people aren't trading at night? Is that why it's more choppy?
Yeah, exactly. Less liquidity. There's less people trading. So it's just more random. It's usually more algorithms just buying and selling just to flop the stock or futures market in this case.
Oh, I'm sorry. I have a question because I have seen, and you know what? Because we've been talking 4 or 5 minutes and we wanted to get into that scam stuff that we were talking about.
Yeah.
I've heard of, but I'm not familiar with people who set up like these automatic, I don't want to sound ignorant, but I'm trying to say it as best I can. They set up like an automatic thing in their computer with algorithms to where their computer is buying and selling for them.
Yep. And that's called automated and quant trading. So what that really means is you create a list of rules that determine your buying and selling criteria. So some rules could be like, okay, if SPY breaks this 5-minute bar bearish, I'm going to go ahead and go short. That means I make money as it drops, and the bot will calculate, okay, it's going to do a trailing stop for this type of rule And then so it starts with their risk and then it trails down and it tries to give you as much money as you possibly can as the stock or ETF in this case drops. And then it'll crank out the numbers. It'll try and manage risk. And what's difficult with quantitative trading or automatic or robot or algorithm trading is there's a lot of factors in the market. You know, you're trying to predict people's psychology and orders in the market, and that's difficult to do with an automated robot. There are some, you know, automated quantitative trading methods that do work very well, and just as with everything, different seasons of the market, it works better. So right now we're in a bear market, and so it's a different type of market environment where some quantitative traders will be doing very well, and other quantitative traders that had their trading bots programmed, they might not be doing as well. So it's really a seasonal thing, and you have to constantly make tweaks. It's a full-time job building that out. It's almost probably just as hard as trading. I have not done quant trading though myself. I would like to probably get into that someday. Just build a basic set of rules like, hey, this is a good setup that in the past has made me good money. Let's program it into the bot, and then it'll take care of all the work for me. And just think of it as if you do it right, it's like a money printing machine.
Greg, I know. No, yes, that does. I know you mentioned before, like the different types of trading. You got swing, you got investing, you got day trading, you got scalping. And again, with real estate, there are people, you know, there's real estate investing, people who buy properties to then use them they'll rent those properties out. You have people that are buy properties that they'll then make Airbnbs. You have people that buy houses and they live in them. For the people like me who are just coming into this, is there a particular style of trading that you would say, I would more so recommend swing trading or day trading or scalping? Does it make sense what I'm trying to say?
Yeah,
like
very good question.
I would recommend swing trading, but I think me and Weenie are talking about two different types of swing trading.
No, you guys are on the ball, and that's really important.
Mine usually and tells you being on the ball, my type of swing trading, but we're going to get into your type of swing trading.
Yeah, no, definitely. And yeah, I would. So back in the day, like last year or the year before, I would recommend everybody should do investing. If that's all you do is get involved in the market, investing's the best for everyone. You buy it and hold it, and you sell it sometime in the future. Lately, though, in a bear market, you don't know how long it could potentially last. I generally, this time it may be different. And again, stick to your own original investing plan. But investing, in my opinion, is not the best way to get involved in the market right now. Of course, stick with your 401k plans if that was part of the plan. Keep steadily dollar cost averaging. Again, none of this is financial advice. I'm not telling you guys to buy or sell or do any trading method. However, with that being said, you guys were on the ball. Swing trading is the greatest type of trading for the majority of people. It's a slower style of trading. You've got a lot of time to evaluate the chart and you just check it daily. You could check it weekly. You just check the stocks once a month, and then you just go through your checklist. Okay, did it do this? Sometimes all it may come down to is just look at this. So this is a daily chart of the S&P 500 I'm showing right now. Sometimes it can just be as simple as, okay, I'm just going to buy it right now, right here at, let's call it $390 a share, just to make it simple, $390. I only want to risk $10. That's the most I'm willing to lose. So I'm going to place a hard stop loss in the system at $380. And then I'm going to put a take profit on SPY at $410. Nice and easy. So I'm going to try and make $20 and I'm going to risk $10. That's the entire trade. It's on a daily time frame. So each bar represents 1 day of price action. And that's just a simple swing trade setup. Most people can, and I believe should learn at least low risk style swing trading, just so that you can get used to how the market moves, how it ebbs and flows, understand the risks. Well, that's one big thing in swing trading that needs to be important for people to understand is that anything can happen overnight. Let's say, something terrible happens, or, forgive me for going this extreme, but let's just say nukes went off or something. Let's hope that never happens. But let's just say something like that happens. The market the next day would gap down huge and it would just be tanking. The market would be crashing. Everybody would be panicking. That would be an unknown risk of swing trading, something that you wouldn't have to deal with day trading because your stop loss would hit. So there's no hard stop losses in swing trading, but it's a great thing for everybody to get started. It's slower. You check it once a day, check it once a week. You're good to go.
Well, Greg, we kind of know what you're talking about because just watching the news, especially with the last president, we would always hear things that when he would say certain things, it would affect the market. And then a lot of people would say, hey, the president has to watch what he says because it can affect the market. So, if we're going to war, if we're stopping a war, if we're doing A, B, and C, if we're stopping trading with this country, and all of these things kind of play into it. But before we get heavily into that, we wanted to talk about something that was important today because we always like people that watch us to be protected. And so we're all aware of scams. Scammers are out there. They're going to try to scam you in anything. And there's a lot of investment scams. We know the traditional ones, Ponzi schemes, and all the ones where people come to your house and try to get you to buy into pyramids and all those things. But in terms of stocks and trading, what are some of the scams that you have seen and things that people need to watch out for? And how do you spot a scam for someone who doesn't have that
Great
knowledge?
question. And it's a really important question because there's going to be a lot of scammers, especially as the market becomes more accessible to people. And so here's a few red flags that show that somebody might be a scammer. So one of the biggest red flags that that person is likely a scammer is if they guarantee results. If they say, hey, buy my trading program or send me money, I'll guarantee you to make $10,000 in 3 days, or I'll guarantee you a certain percent. Nothing is guaranteed in the market. As we just talked about earlier, anything can happen. Generally, that's a big no-no if you guarantee results. I mean, they can show past results and you say, hey, this is what my program, this is what typical students make, but they can't guarantee anything. So if they say that they guarantee any results, it's just a red flag. It doesn't mean that they are a scammer, but definitely a red flag. Another big red flag in trading, and again, it doesn't mean that they are a scammer, it's just a red flag, is if they're really flashy. If they're really flashy, they're showing stacks of money, they're showing
Lamborghinis.
It's nothing. It doesn't mean that they are a scammer. It's just, okay, that's a red flag, just so you know. They're trying to show a lifestyle that they could own it, they could be renting it, there could be a lot behind the story, it could be their friends, so just flashy is not good. Another big one is you really only see only wins. So a lot of this is very common nowadays, where in the social media world you're seeing the best of what people have to offer. So and trading losses happen for everyone. If you see only wins, I mean, it's just a red flag. It just means that they may not be as transparent as you might think. So, it's one of those things where if they're showing only wins, if they're being flashy, certainly if they ask you to trade your money, don't do that. No, nobody should ever be trading your money for you unless it's some well-known hedge fund. Don't fall for any of that crap. Never let somebody take your hard-earned money. This is something that they don't have to do, but I do it myself. I actually do a money back guarantee, for my courses. So let's say you go through my course and you didn't like it for whatever reason. I'll be like, okay, just tell me what you didn't like. I'll make sure to make those fixes. Here's your money back. It just makes it that it's nice and easy to back out with something stock related. If they don't offer a money back guarantee, it's kind of like, nah, got your money. Nobody has to, but it's just something that I personally do. So really just make sure that they're not guaranteeing results and make sure that they're not being flashy. Make sure that they're showing their wins and their losses. Another big component is their track record. So have they been Have they ever done a live stream? Have they ever showed their trades? Have they ever shown their accounts? Have they ever, how long have they been doing this for? Did they just pop up last week? I think time and experience in this business is really, really important to show that they've been around for a while, Yeah,
because even Warren Buffett talks about his losses. Speaking of Warren Buffett, that's why I'm friends with you, because that's going to be you one day. So.
Oh, yeah. Yeah, yeah.
And
don't big time me, Weenie.
Yeah, exactly.
Don't big time me, Weenie. Don't big time us when you're Warren Buffett, okay? Don't you big time.
I'll never forget those along the way.
Weenie, I have one more question because I know we're getting close to time. So I know everybody, for the people who, I know you have a following already. And those of you who don't know anything about trading, Weenie Trades is the place to go. Let's say there are people out there who don't know who Weenie is and they want to get into this. Are there other people that you would say, oh man, these are some of the people that I've learned from that you would, you would recommend them to go to if you couldn't recommend yourself?
Oh, of course. Yeah. And I usually state this each and every day, each and every stream. Look up Backpack Trader on YouTube. If you look up Backpack Trader on YouTube, those guys are my mentors. They've written lots of books on trading. They've been in the business for many, many years. They're a little bit new to the YouTube game, but they've been trading for a very long time. And I've gone through personal coaching with them, and I've seen dramatic changes in my results. So look up Backpack Trader, comment on any of their videos just to get more information. They've also sometimes come on my live streams. Romulus has come on my live streams. At some point, we'll get another Backpack Trader, TJ, the CEO of Backpack Trader. So I highly recommend those. I've also had lots of other people come on streams. You can see anybody that I've done an interview with on my channel, Weenie Trades LLC. Every single person that I've done interviews with and talked with, great people, highly recommend. And trading is just one of those things where find your style and then stick with the person that really helps suit your lifestyle and what you're looking to achieve, whether it be day trading, swing trading, which most people I think can do in a reasonable fashion because it's a low time commitment. The investors are guys like Warren Buffett. Some YouTubers are investors. So yeah, investing, day trading, swing trading, find your niche, look around the internet for those that, may fit your niche. And again, pay attention to those red flags. And if they have those red flags, it doesn't mean that they are a scammer. It's just an increased likelihood that they're a scammer. Right. But I believe that most people are getting better and are good nowadays.
Yeah. Now, DeAndre, when you go searching his Weenie's YouTube channel for interviews, skip the ones where I jump on his channel because I'm not giving any fruitful information. I'm just up there being disruptive. I feel like when I go in his Zooms, these people are like, get back to trading and get this guy out of here.
No, not
Can
at
you get
all.
him off, please?
No, not at all. They love you.
Well, guys, we've reached the portion before we close. We always have weekly wins. Again, weekly wins is a way for us in this crazy world to focus on one thing that has happened positive. And as always, we're going to start with our guest. So, Weenie, what is your weekly win?
Great question. And I was kind of thinking about that as I was on my jog. I was like, weekly win. And it actually just came up that my fiance, Bryce, she had just gotten tickets, airplane tickets to go to Florida to visit her mom. And I love visiting Florida because get to swim in the beach, get to check out Miami, check out the cities. There's a lot just new restaurants to check out. So that was kind of a weekly win, just hearing that she went ahead and got those tickets. So very thankful to just kind of get out of the regular routine for a bit. I will likely still be streaming while I'm in Florida. So be sure to watch some of those live streams, whether it be on the phone or if I'm on my laptop. So should be a lot of fun. What was your guys' weekly wins?
Make sure you visit Tampa, okay? Tampa's where it's at.
All right, I will. You got it.
What's your weekly win?
You're gonna bring up my city, Miami, and then follow it up with Tampa. Why don't you just tell them to go to Opalatka next? Or Palatka. My weekly win. Well, my weekly win. It has to do with streaming again. Yesterday on the count webcast with Pedro Lugo, we had our first inmate that we interviewed. I talked about it on Weenie's channel yesterday. He was supposed to serve 22 years in federal prison. He ended up serving 17. He's out. He got out years ago, but he's has a job making $28 an hour, takes care of his family, and he's a positive role model in the community. He talks to young kids. And so that was my weekly win. Hearing someone who's been through all that, turned their life around, and is spreading that knowledge to everyone was a weekly win for me, because it was it's not a thing that gets people excited. Hey, we're going to talk to an inmate or a former inmate. But when you hear people like him talk, it's such a great thing. It's such a great positive thing. And reminding people that people who go to jail aren't just animals. They're human. And some of them want to get their lives turned around. And the more we can do to help them do that and not return, the better. So that was my weekly win, getting all that information out there.
Yeah, we'll definitely have to have him on the show, because I had a point that I was gonna say, but I'm gonna save that for when he's on.
Okay.
But my weekly win is I'm actually getting ready to transition careers, and so I've been in the fitness industry for about 3 years, and so I am, I guess, moving into more of a sales role.
You breathe, not the challenge.
He said switching careers. I was like, wait, you're leaving me? We just started.
All right, peace.
No, this right here is going, man. This is we're riding this out for years. No, but I'm moving more into like a sales role, and so I interviewed for a company, and I had 2 interviews, and I've breezed through those 2 interviews, and now I'm more so looking to be paired with a company. So that's my win, that this is something brand new for me, and it just seems like things are rolling. So that's my weekly win, man. But to everyone that has tuned in, we greatly appreciate you guys. Thank you for your questions. Thank you for your comments. Greg, as always, we truly appreciate you for coming on and sharing your knowledge and wisdom on this particular topic. I can say I can breathe a little bit. I can pick my brain up and put it back in my head now. It's for now, that is. But before we leave, guys, you can follow me on Instagram at DeAndre Presley Music. You can follow me or friend me on Facebook at Press Prevail. And then, Keone, please tell them where they can follow you at on your social media handle.
It is the same everywhere. On Facebook, it's Keone Productions. On YouTube, it's Keone Productions. The website is KeoneProductions.com. And of course, on the YouTube, it's Keone Productions. Make sure you follow Weenie Trades. All you got to do is type in Weenie Trades in YouTube, and you will find there's only one Weenie Trades, and you will find him. And you got to watch his content if you really want to learn what to do. And he's daily trading Monday through Friday on there, and he gets to as many questions as he can, because he's doing a lot of trading. So you can't just sit there and just answer every single question that pops up. But
I can.
Yeah.
If you come in and spam me with questions, I got you.
He tolerates my tomfoolery when I come in there, and his fiance has learned to tolerate my tomfoolery. And if there's anything that you learned today from Weenie, is swinging is a good thing.
Yeah. If you're